Gold miners Simmer and Jack and Village Reef have entered into an agreement to merge. Village will acquire the majority of Simmer's assets and in turn issue the majority shareholding to Simmer. Village will issue about 597 million shares to Simmer at R2.20 per share. Simmers will unbundle the shareholding to its shareholders. The aggregate price of the merger will be around 1.3 billion rand. I'm now joined by Simmer CFO Marius Saaiman. Marius, thanks so much for joining us today.
Thank you.
Could you unpack those numbers even further for us? Because essentially the price of the exchange ratio is based at a value of R1.05 per Simmer share, which of course is that 30-day preceding date of the announcement. So that average ratio, basically.
Correct. I mean, in terms of the share price, the 105 is actually a premium of around 15% to the 30-day VWAP, based on a sort of calculated VWAP of about 92 cents for the preceding the announcement. So the 105 is a premium of 15% to that.
Of course, this has to go for shareholder approval. How do you think it's going to be taken up?
We have canvassed some of our major shareholders in terms of the transaction. The general support has been good in terms of the proposed transaction, but it is obviously still subject to the formal approval from shareholders, which we expect to be somewhere in late February.
Do you think that some shareholders might become reticent with this deal? Do you think that perhaps they want a better deal on the table?
I don't think that that's the intention, certainly to renegotiate the price as far as the deal is concerned, and shareholders will need to vote on the deal that's been put forward. It obviously has full support from the Simmer's board. It's a unanimous approval in terms of this particular transaction. Over the last 12 months, we have looked at a number of different opportunities and other potential transactions, but this does sort of provide us with the following, which is really a break with the history of Simmers, which we think is really important in terms of taking the assets forward. And then very importantly, Simmer shareholders end up holding around 66% of the combined entity. So they still have exposure to exactly the same assets and they still control those assets. But what they do gain is exposure to platinum in Lesego, that is the Village asset, and to Merge, the antimony and gold asset held by Village.
You were talking about various other potential transactions that could have come to the fore. We know that Simmer and Jack has embarked on various rights issues in the past. Was a rights issue ever something that you had in mind?
We did contemplate a rights issue around about April in a different format in terms of the convertible loan format, just after we recapitalized First Uranium, when we shared in our percentage of the 34% that was issued, the 150 million convertible loan notes by First Uranium, which we shared in. But you know, the rights issue would have been so dilutive to the Simmer shareholders at that stage, which would have caused problems, obviously, in terms of our Black Economic Empowerment shareholding, but would also have been based on the sort of instrument that was put forward, very restrictive in terms of Simmer's future, because there would be a security vehicle around those convertibles that were proposed at the time. And that would restrict, obviously, the ability of Simmers to freely issue capital or trade in the future.
I spoke to Peter Major from KD's a little earlier, and he was talking about entering the stock at around 2 to 3 rand a share. We know that Simmer and Jack's share price hit an all-time high of 750 a few years ago. We know that in 2005 it was around 25 cents. It then subsequently shot up to 50. Do you think that some shareholders feel slightly disappointed? Because that's the sense that Peter Major gave me.
I think there may be some of the shareholders that feel disappointed in terms of the overall performance of Simmers over the last couple of years. But you know, it's been a very public sort of spat between management and empowerment. It's been very difficult to reconstitute that board, which we have done very successfully in February, with, I suppose, one of the best boards in the mining sector, with stalwarts like David Brown, Stuart Murray, Ralph Harvenstein on the board, and that's been very good in terms of stabilizing Simmers. However, the feedback we've had from international shareholders, potential new shareholders, have been that they are still put off by the history of this entity. And this transaction allows that history to disappear and for shareholders to focus on the real assets that we've got in a new entity that is better placed to access capital markets. and therefore poised for growth in terms of that sort of junior mining sector.
You said, the company wants to take the assets forward, and I think that's pretty much the sense that most shareholders have been getting over the last 5 years. How now are you going to change that and take the assets forward?
I think what we do get in terms of this particular transaction, besides the access to capital markets at a discount that's potentially less than we would suffer in the Simmer's name, is a very experienced management team, particularly with Bernard Swanepoel as the CEO of Village, and the vast experience that comes with him in terms of running these sort of more marginal junior mining companies.
So he's going to be running the company.
He will be the CEO of the merged entity. Yes.
Let's look at First Uranium, because that's separately listed. Do you think that we're going to be seeing a merger happening down the line, that perhaps it's going to rejoin the Simmer's assets once again?
From a merged entity, we're obviously very interested in uranium. I think that First Uranium has a big role to play in that particular sphere, whether it's as consolidator or as a major producer. And we do find uranium very attractive, and we'll look
because it's rebounded quite nicely as well.
Absolutely, particularly in Canada. We haven't seen that sort of flow through to the JSE to such a large extent, mostly due to the thin traded sort of levels of First Uranium in SA. But we do expect that uranium will continue to strengthen, and therefore it is a very important asset for us in terms of that particular space.
Let's look at the gold price. New all-time high, $1,427 an ounce. That was hit in yesterday's session. It's expected to go to $1,500 soon. That's what most analysts are expecting. What are you forecasting at this point in time? Quite a lucrative space to be in, surely. Indeed,
certainly. I think from a marginal player, more so than anything else. We're very bullish on gold. We also expect that to continue strengthening in the medium term. And therefore, it's very important for us to sort of focus on costs so that we get the full benefit of the strengthening in the gold price in terms of the profitability of the operation.